Hello everyone, I'm Dr. Ishi Mohan, Assistant Professor, Faculty of Commerce, Banaras Hindu University. We are going through our prescribed and scheduled lecture on financial statement analysis and forecasting. And in the previous lecture, we have already discussed the practical problems on the common size statement. Now, in this lecture 4, we will discuss and solve some of the practical questions on the comparative statements. Now we have with us 4 practical questions. 2 are of the easy mode and from the income statement, and 2 are from the balance sheet. So first of all, we are going to solve the first question, practical question of the common statement. And this is a comparative balance sheet of an organization dating on 31st March 2021 and 31st March 2022. As you can see the various financial elements of an organization. First is the equity and liabilities, and the organization is sharing the share capital for the 2 different period of time. In the 21, the share capital is 50 and the following year it is increased to 80, and there is a long-term loan 40 and 35, trade payable 20 and 30, and the other current liabilities account for 20 and 15 for the 2 different years. The assets, the equities and the liabilities are totaling to 130 and 160 for the 2 period of time, and the assets is there where the non-current assets are the shape of fixed assets, and the stock, current assets account for the stock, debtors, cash and other current assets, and the various items are given over a period of time there. What we have to do is to prepare a comparative balance sheet here. So we are going to solve it. Since it is a comparative balance sheet, we will mention it as well as the date. Now, comparative analysis is a little different from the common size statement. Here they are taken into the absolute terms, whereas in the common size statements, they are taken against the base value. Absolute amount in rupees, and this is percentage in percent. So the very first was the equities and liabilities. The financial elements are share capital, long-term loans, trade payable are there, other current liabilities. 50 long-term loans for the year 2021, 40 trade payables are 20 and other current liabilities are 20. 80 for the following year, that is share capital, 35, then 30 for the trade payables and 50. This is the total that will come at 130 and 160. Now first we will take the changes that will be in absolute terms and in rupees term. What we see here that the share capital for this year 2021 was 50,000 and the later it was increased to 80,000 rupees, as we can clearly see that there is an increase of 30,000 rupees here. This 30,000 accounts for how much percentage of the change? So when we take the change, percentage change, we know or tell it as a delta. Delta is a change, that is 80 minus 50 divided by the base value, which will be here 50 multiplied by 100. So it will come around 30 divided by 50 into 100, and this figure will be 60%. Similarly, 40 was in the previous year and current year this long-term loans is 35. We clearly see that the loans have been reduced by the 5,000 rupees. So we will mention here the 5,000, and the reduction is not represented through the minus value. We simply put a bracket which shows that the amount has decreased. Trade payables from 20 to 30, which shows the increase of 10,000 rupees, and the current liabilities from 20 to 15, again a decrease in 5,000. We will not put a negative sign here, but we'll just put a bracket which will tell that amount has been decreased as compared to the previous year. This 5% will account to 5 is a change delta, long term loans. So delta upon the previous base value 40 into 100. This delta has been 5 upon 40 into 100 and will come at 12.5%. Similarly, the trade payable 10,000 has been the change. 10 divided by 20 multiplied by 100 will come to 50%. And similarly, the other current liability that has been from 22 decreased to 50, 5% change again come to 5 divided by 20 into 100 and this will come to 25%. Now here in the total of the equity and liabilities, 130 was in the previous year, current year it is 160, obvious changes of 30,000 rupees, and this 30 upon 130 multiplied by 100 come to 23.08%. Now this is the comparative statement. As you can clearly see that the changes in the financial elements like for the share capital, long-term loans, trade payable and other current liabilities, long-term loans has decreased as well as the other current liabilities has decreased, and here it can be clearly shown here. This is what the comparative statements are. They are in absolute terms. They are not comparable against any base value, and that is why it is relatively easy for an organization to see and review and decide regarding the decisions taken or the other elements of the balance sheet. Now we will come, already dealt with the liability side, now the asset side. Absolute change, that will be in rupees, and percentage change in percent. The items of assets are non-current assets, and in non-current asset there is a fixed asset, current assets, stock, debtors, cash and other current assets. Fixed assets was 60,000 and current year it is 80,000 rupees. Stock has been 20 and currently it has been decreased to 15,000. Debtors 15, currently it has increased almost double to 30,000. Cash from 30 to decrease 25 and current assets from 5 to 10. Total will always come the same that has been from the liability side because this is balance sheet and both the sides should match. Now the changes. 60 to 80,000 is a clear change of rupees 20,000. Stock 5,000, that is negative, so that is why we will put a bracket around it. 15 change and decrease in the cash from 30,000 to 25 is again 5%. This is 5 to 10 increase in 5,000 rupees. If you go to the percentage change, 20 upon 60 multiplied by 100 will come at 33.33%. Decrease in the stock, 5 upon 20 into 100 will come at around 25%. Increase clearly seen, almost double the increase, so the changes is around 100%. Again 5 upon 30 decrease in the cash, 16.67%, and other current assets change or 5 upon 5, again the same 100% change. This change has clearly be 30% and it will be same 23.08% as was the case in the liability side. So this is the comparative statement of an organization and the practical problem 1, where you can see that in the balance sheet the changes are there, absolute changes are also there. You can clearly see how much changes are there, which shows you the magnitude. Degree, absolute amount tells you the degree and the magnitude is represented through the percentage change. First, it tells you the changes, how much changes, and second, it tells you how much increase or decrease was there in the quantitative aspect. So, both the qualitative and the quantitative aspect are catered in the comparative statement analysis. Now, we will see the comparative statement on the balance sheet. Now, here we will have the two practical problems which is focus on the income statement of an organization, that is a profit and loss account of an organization. Here the organization's name is a Sun account, and we will go through the problem here. This is the particulars of an organization Sun Limited for the two ending time, that is 31st March 2023 and the following year of 31st March 2024. Revenue from operations is 16 lakh and for the following year it is 20 lakh rupees. Employee benefit expense is an expense which has increased significantly by 2 lakh rupees in the following year, and the other expenses has decreased for the organization. Now the tax rate also there, that is at the rate of 40%. So we will solve this question again by writing the detailing, that is a comparative statement of profit and loss account of Sun Limited. Since you know the name of an organization, you have to mention it here. For year ending March 31, 2022, 23. Going through the particulars here. This is 2022, 23, 31st March, 2023, 24, and this is the absolute positive or negative change in rupees, and this is percentage change in percent. So first is revenue from operations. So it was 60 lakh for the previous year, and for the current it is 20 lakh. We can clearly see an increase of 4 lakh rupees, and if we go through the percentage, it will account to 25%. Second is we will deduct all the expenses. So expenses here are employee benefits. Second is other expenses, not clearly mentioned but in a grouping. So employee benefits 8 lakh rupees increased to 10 lakh rupees, and the other expenses has decreased from 2 lakh to 1 lakh. We have already said that increase is not, but the decrease should be put in the bracket to show the decrease. 2 lakh of rupees 4 lakh will account to 8 lakh will account to 25%, and this 1 lakh of 2 will account to 50%. Now this is profit before tax, which will come at rupees 6 lakh. Clearly the profits have increased 3 lakh, and this 3 lakh is 50% increase from the previous year, and we will deduct the tax which is at the rate of 40%. So 2 lakh 40 of 6 lakh is 2 lakh 40,000 will come at 3 lakh 60,000, and 40% of 9 lakh 3 lakh 60,000 will come at 5 lakh 40,000. 1 lakh 80,000 is a net, and both of this will be 50% and 50%. So since this is a comparative analysis, like in the previous case or in the common size statement, we used to see that each and element represented as a part and parcel of the base value. So every amount should add up to the 100%, but not in the case of comparative statements. Now another and the last question or the practical problem is here. This is another organization. Suppose this is also a Sun Limited, and it is an income statement from the 31st March 2020 and following year, that is 31st March 2023. Now we have a little bit of more elements in this practical problem as compared to the previous question. Here the revenues from operations or the sales, net sales is 6,50,000 gross and less returns. So the net sale will come at 6 lakh, and this is 5,70,000. Income received and dividend receipts are the other incomes. They can be categorized into the other incomes category. So 35,000 and 45,000, and the following year it is 25,000 and 50,000 rupees. Totaling of total revenue is 6,80,000 and 6,45,000. Some of the items of the expenses are the cost of material consumed, which has significantly increased by the 50,000 rupees, salaries 25 to increase to 35,000, and the other elements like the rent have decreased, but the office expenses have increased, as well as depreciation increased and selling expenses has increased. So the total expenses are 5,35,000, and for the following year it is 5,97,000. So we have to prepare a comparative income statement. So let's solve it. So this is comparative statement again of Sun Limited of profit and loss account. So this is again an income statement for year ended March 31st, 2021 and 2022. These are the particulars. Twenty 22, 23. This is absolute positive or negative. This is percentage positive or negative. So first is revenue from operations. It was 6 lakh, then decreased to 5,70,000. Clearly a decrease of 30,000 we will put in a bracket. Then add other incomes. So other income are interest received and dividend received. So it is 35,000, 45,000. For the following year it is 25,000 and 50,000. So income received have decreased by 10,000 rupees and dividend received have increased. So it is the 5% because 30,000 is 5% of 6 lakh rupees, and 10,000 of 35,000 is around 28.57%, and dividend received 5,000 of rupees 45,000, 11.11%. So the total revenue 6,80,000, 6,45,000 and 35,000. As you can see, there is decrease. You can also put a bracket around it and it would come out 5.515%. Now this is the revenue side. What we have to deal with is next is the expense side. So expenses, first of all. Absolute, and this is percentage terms. First, the expenses are cost of materials. Then there are salaries. Then there are rent, office expense, all the working capital expenses are there. Depreciation is there and the selling expenses is there. Cost of material 4 lakh rupees. Salaries are 25,000. Then it is 15,000 rent, 20,000 office expenses, 35,000 depreciation and 40,000. Cost of materials have increased current year by 50,000 rupees. Salaries have also increased by the 10,000. Rent has decreased. We can clearly see that the office expenses have increased. Depreciation has also increased, and the selling expenses have increased by the 5,000 rupees. We will write it in absolute term. 50,000 10,000 since it increased. Decrease is shown in a bracket. Then again decrease in the depreciation and the 5,000 increase in the selling expenses. So this is clearly in the percentage term, that is 12.5. We all know the procedure. 10 upon 25 into 100, it will come at 40%. 3 upon 15 into 100 will come at 20%. Then it will be 5 upon 20 into 100 will come at 25%. Again the 5 upon 35 into 100 will come at 14.29%. And the last will come at 12.5%. So this is total expenses: 5,35,000, 5,97,000, a net increase of 62,000, which will come at around 11.59%. Now we will deduct the tax from it, which is at the given here, 45,000 previous year, and the current year it is 12,000 only, a clear reduction by 33,000. And 33,000 is a significant amount. That means around 73% tax has decreased. Now this is profit after tax, which will be available for the organization. That will be 4,90,000 for the previous year, and current year it has increased to 5,85,000. A clear margin and a profit of 95,000, which will be around 20%. So 20% profit after tax is a very good amount of tax available for the organization. And this is how the comparative balance sheet for the organization will be seen. So you can clearly see this is the particulars of the income statement showing all the income side, and this is all the expenses side, and this is the total expense, and this is what available for an organization, that is 95,000 difference between the previous year and the current year's profit. This is how you can clearly see that comparative statements look like for a profit and loss account of an organization, and it clearly give a layman's a clear picture and a view that how much changes between the 2 years financial elements has taken place. So I hope that it will clear all the confusions and the scenario regarding the comparative statements. Thank you for all your time and attention.